As FTX founder Sam Bankman-Fried awaits arraignment in Manhattan court today, what's on his mind? Our next guest has written a book on Bernie Madoff and is an expert on scandal and fraud. Joining us now is Champel Capital co-founder and managing partner Amir Weitmann. Amir, great to have you on the show this morning. Do you see similarities between Sam Bankman-Fried and Bernie Madoff?
Well, first of all, I think we should be careful. I mean, we don't know yet. He hasn't entered into a guilty plea. So, we live in a free and democratic state. And so long as somebody has been proven guilty, he's innocent. So first of all, I think we should remember that. Having said that, fraud is fraud. And you can look at the history of fraud for thousands of years. And there are some common features to all frauds, and it's human gullibility. The belief that people are, that money comes for free, and that you're going to do some very simple action and become very wealthy or get something which you're not expecting to get under normal circumstances. If I'm, talk about Bernie Madoff, at the time, he was not promising his investors incredible returns in terms of how much it would be, but he would give good returns with zero volatility. Now, at the time, he was talking about maybe 10, 15% yearly, so essentially giving every month 1%, 1.5%, something like that to his clients, zero volatility. We all know there is no asset like that in the world. It doesn't really matter where you're going to be investing. There isn't such an asset like that. It just does not exist. So in that respect, if you're looking at Sam Bankman-Fried, so he was not exactly promising the same sort of stuff, but he was promising his investors that they are going to have incredible returns and just, everything will be fine and risk level is close to zero. We all know this is not serious. So in that respect, I think you can
When one talks about investors, there are account holders, and then there are also the people who invested with Sam Bankman-Fried, and many of those were institutional, large institutions, the venture capitalists, etc., who put money with Sam Bankman-Fried. It seems like they didn't do their due diligence. I'm being, as a previous guest said, I was being very polite. It was beyond shocking how little due diligence was done. What are the similarities in that respect to what happened with Madoff in terms of how large institutions approached somebody like Sam Bankman-Fried, Bernie Madoff? And what was it about them that caused these institutions to say, do we really need to do all the extra work? I mean, those of us who have ever done due diligence on an investment know that if you have the right manager, or if you have a tough manager, it could take a long time before you put a penny into something. Yet it seemed they were very quick to do this. What happened?
Well, it's, actually I had a whole chapter on this story at the time, and I think it has to do with, at the time, it had to do with the personality of Bernie Madoff, and it probably, I don't know Sam Bankman-Fried, but it probably has to do with his personality. In other words, what happens is that you kind of get somebody on board because you kind of impress him, and people say, you know what, this guy is a genius, let's do it, and they essentially don't do a due diligence. They're essentially misbehaving. There's some of these institutions investors behaving properly. I mean, there's no other way to say it. But then what happens is that once the first guy has come in, then the second guy says, oh, the first guy invested, so that probably means that it's okay, right? Otherwise, he wouldn't have invested. And then he puts the money, and then the third and the fourth and the fifth. And the more people like that enter the fray, then the worse it becomes, because it kinds of, once you have, 5 large investors and reputable investors in the cap table of the company, then of course it's good, right? And we in Champel Capital, we invest in a tremendous amount of time and energy and money to do our due diligence, which doesn't mean, by the way, that we're always right, but we really try our best, and I would expect and hope that everybody does the same. But unfortunately, experience has taught us that this is not always the case. And then you have, in some cases, again, people who are just going to invest in something because it looks good, because it's trendy. And I can tell you, I mean, over the past 2 years, we have not invested a dime in anything which is remotely close to crypto, because generally my personal view is that once, when there's a buzzword, you should be careful, because buzzwords bring with them bad money, bad investors. So you hear AI. I mean, all our companies now have AI, but back a few years ago, I heard AI. I said, okay, that's enough for me. I'm not investing. There was at some point, there was a buzz around cannabis. Didn't invest. There was a buzz around crypto. You don't invest, because typically you're going to see a curve of investors where everybody throws money, and so it's boom and bust, right? So you're gonna have and then afterwards,
full of buzzwords.
Right. Yeah, but you have to be careful, because generally it ends in financial disaster. So after the bust happens, you have to see who remains, and then that's the right time to actually consider it, doing an investment. And now, for instance, that's something I'm not sure. I was listening to your previous interviewee, and when is the bottom? I don't know when is the bottom, but it's clear that now we are in a better position to invest than we were maybe a year or two ago, right? Because a lot of this crazy speculation is out of the way, and now that sense is slowly coming back to people. Now we can look at interesting projects where there is real value, and I'm sure there will be some of those projects will have value, but probably now is the right time to look at that.
I also want to mention some of the differences between Madoff and Sam Bankman-Fried. I mean, Sam Bankman-Fried has said himself that, he believes he actually had a business and Madoff did not. He's also going to plead reportedly not guilty, according to sources, whereas Madoff pled guilty. So going down these lines, I was wondering if you could actually weigh in on sentencing, because Madoff got put in jail for quite 150 years. Wow.
150 years, and he didn't live to spend the 150 years in jail.
Yeah,
usually the case.
Sam faces about just over 100, like 115 or so.
He's a bit younger.
Do you think he's a bit younger? Is there? Do you see? I don't know, any similarities or could you weigh in on sentencing in that regard?
Frankly, I'm not a legal expert at all, and certainly not in terms of the criminal system in the U.S. But if it can be proven to have acted, with malicious intent, I would guess that he's going to spend a long time in jail. It's going to be very, very painful and unfortunate for him, because he's a young fellow. He shouldn't have put himself in such a situation. But unfortunately, once you essentially, I don't know if stealing is the right word, but if you create a situation where there are losses of hundreds of millions and then billions of dollars because you misbehave, this is going to have serious consequences. I don't see any other way of putting it in any other way. It's going to be hurt. It's going to hurt. I mean, he needs to have.
All right.
I don't know. I wouldn't want to be in his place now. Sorry.